Internal Revenue Service IRS Tax News. Checking and withholding can help taxpayers decide if they need to give their employer a new W-4. You may be asking yourself, what's a W-4? W, common letter that starts many question word phrases such as what, when, why, and where, as well as many other words. But here, we're more concerned with the form W-4 as opposed to what a W's for. So let's continue on. IRS Tax Tip 2021-75, May 26, 2021. All taxpayers should review their federal withholding each year to make sure they're not having too little or too much tax withheld. So let me give a recap on what the withholdings are here because it's kind of complicated and there are changes at this point in time with all the changes in the law and the economy and people's working conditions. This actually gets quite complex. So remember, the general rule is the IRS wants to get paid during the year. They don't want you to pay them at the end of the year when you file the taxes. So we're in 2021, for example. They want to get paid as you generate your revenue. Your silent partner wants their money as you earn it, not at the end of the year when you file the tax return. If you wait till the end of the year, for example, wait until you file the tax return for 2021 in April 15th of 2022, what will the IRS do? They'll charge you penalties and interest. So the major incentive we have is to avoid penalties and interest. How do we do that? Normally, if you're an employee, which is the most common setup, then you're going to fill out the W-4, and the employer then is the one that's going to take money out of your paycheck before you even get it, give it to the IRS, thereby paying the IRS during the time period during the year. Knowing how much to pay the IRS is actually quite complex because we live in a pretty complex tax system. There's no way we can possibly know exactly what the tax will be owed until we actually do the tax return because we have a progressive tax system. We have all these changes that are happening. We got these credits that are going on. So what we typically do is shoot for a bit of an overpayment of the IRS in the form of the withholdings. And then when you file the tax return, hopefully you get some money back in the form of a refund. And by overshooting, we're going to avoid the penalties and interest. That's going to be the major point. We're trying to avoid the penalties and interest by overshooting because if we undershoot, we will owe taxes and that'll be a problem. And most likely, we'll be owing penalties and interest on top of that. Now note, traditionally, this worked a lot easier even though the tax code was more complex, meaning if you're in a situation where you have a one-income household where one primary earner is there, and that's a stable place, meaning they work in the same place for a long period of time, it's a stable income, then it becomes quite a lot easier to estimate what the withholdings will be and take care of that even when you're in a world of very complex tax systems with a progressive tax system and so on. These days, however, there's a lot of people that are working, there's multiple income households, of course, and there's a lot of people that are changing jobs. They don't have the same job. You might have multiple jobs throughout the year. You might have some unemployment, especially this year. You might have some unemployment, some other jobs, and multiple income households and so on. So it becomes a lot more, and you might have gig work or something like that, some sole proprietorship type of business as well. So it becomes a lot more difficult to estimate what your taxes withholdings should be and estimated payments when you have multiple incomes that are going on and when you have multiple people that are jumping around from job to job. On top of that, at this time period, we can't really rely on the prior year so much because that's usually what we do. We look at the prior year and we say, okay, next year is going to be somewhat similar because normally in standard times, in stable times, that's the case. But in these times, they are not stable times. So we can't really rely on the prior year as much to predict what's going to happen in the next year. So that once again adds another layer of complexity to the withholding calculation. So if you are bouncing around more this year than in prior years, you might be in a situation, many people are, where they had a pretty stable kind of income structure, W-2 employee income. And the longer you're in that kind of system, then the less you kind of think about taxes because it's all working out. Everything's working the way it should. Once you start to kind of bounce around or once you start to do your own self-employment type of work and things change, then it could be kind of a shock that you got to make some adjustments to your withholdings and think about that a little bit more in depth. So how do you think about that? Well, you can use a projection tool to kind of figure out what your taxes are going to be next year. The IRS actually has a nice projection tool that can help you with that calculation. And again, This year, normally what happens is you figure it out based on last year and what your withholdings should be, and you carry that over to the next year. But that might not work, and you might have to use some more, sophisticated tools to estimate what your taxes will be in 2021. Okay, so employees, retirees, and self-employed individuals can use the IRS Tax Withholding Estimator. Here's the withholding estimator. Now, this is almost getting to the point where it's basically tax software, because that's really, when you have a more complex system, you kind of need software to basically predict what's going to happen in the future. And this estimator is getting closer to be basically software that you can put multiple income streams in it and so forth, and project what you think your income will be in the following year, and then it can help you out to fill out your W-4 form or make estimated payments as needed in your circumstances. So it can be used to help decide if they should make changes to their withholding. This online tool guides users step by step through the process of checking their withholding and provides withholding recommendations to help aim for their desired refund amount when they file their next year. So taxpayers can check with their employer to update their withholding or submit a new Form W-4 Employees Withholding Certificate. So note the W-4 form is the form that you're going to use to tell your employer how much they should withhold. So realize that the employer is forced by the government, of course, to take your money away from you and pay your taxes for you on your behalf. It's kind of a benefit to you, but it's kind of, they wouldn't do it if they weren't forced to do it. But they can't really give you tax advice on how to do that, because the government's also, they're also liable in terms of giving advice. They're not there to give tax advice. So they have to do it. They have to do the withholding, but they can't really give you advice on it. So they're going to give you the form normally. If you talk to the Human Resources Department, in other words, at your place of business, they're probably going to give you the form and say, hey, I can't talk to you about, what you should do other than just how to fill out the form, because of liability purposes. So what you have to do is take the W-4 form, which can be a little bit more complex if you have multiple income streams. Possibly use the withholding estimator to help you out to fill out the W-4 form, and then that can be used to adjust your withholdings to whatever it needs to be adjusted to. So adjustments to withholdings: individuals should generally increase withholdings if they held more than one job at a time or have income from sources not subject to withholding. So if you have two jobs, for example, and this could be even if you're married and you have two jobs by the two spouses or something like that, then oftentimes people will tend to undershoot what their withholdings should be, because they base their withholdings when you normally do just the withholdings for your place of employment, then you're only taking into consideration because that employer only knows the income from that place. And we have a progressive tax system. So once you combine your income there to other incomes at other places you are working, or possibly from self-employment businesses, you are in a higher tax bracket than that one place of employment knows about. That's why it's more complex, or one reason the progressive tax system makes it much more difficult to estimate what your withholdings should be. So you have to take into consideration these multiple incomes to know what tax bracket you're in, and then figure out kind of what your withholdings should be. The Form W-4 can help with that. Same with the estimator tool can help you with that. So if they don't make any changes, they will likely owe additional tax and possibly penalties when filing their tax return. Individuals should generally decrease their withholdings if they qualify for income tax credits or deductions other than the basic standard deduction. So the other kind of thing, it could work the other way. And you might say, well, why don't I, you want to, the goal is to withhold a little bit more than your actual tax will be, once again, to avoid penalties and interest. That's going to be the main goal. If you withhold, and there's no way you're going to get it perfect. It's impossible because the tax code is too complex. So unless you have a very basic tax return, it's not going to be perfect. If you over withhold, then you might get a bigger refund at the end of the year. But at the same time, if you can lower the withholdings, then you get more money throughout the year because your paycheck will be higher throughout the year. So you got that trade-off between the two. So if you have other kind of things that take place, especially, again, with all the changes that are happening to the codes, you might have credits and other deductions that could be involved as well, that once again, you need to take into consideration, and possibly those could help you to lower the amount of withholdings, which could increase your monthly paycheck. So either way, those who need to adjust their withholding must prepare a new Form W-4 Employee Withholding Certificate. They need to submit the new Form W-4 to their employer as soon as possible since withholding occurs throughout the year. Individuals who should check their withholding include those whose spouse is an employee. So if you have, a spouse who's an employee, that complicates the withholdings a lot, and you probably want to do a check on it. Who are working 2 or more jobs at the same time, or who only work for part of the other year. So if you have multiple jobs during the year, again, complicates things a lot, so you probably want to look into that. Who claims credits such as the child tax credit. So a child tax credit could distort your withholdings. So with dependents age 17 or older, who itemize deductions on prior year returns, with high incomes and more complex tax returns, with large tax refunds or large tax bills for last year. So if you got a large, and that's the general rule, right? If the prior year, if in 2020 you got a really big refund, well, then that seems like you should be able to lower your withholdings and get more of that money during the year. And if you paid a lot of taxes, then that would mean that you'd have to up the withholdings, you would think. But again, the prior year, 2020, is not as good a predictor for 2021 for many people due to the fact that 2020 was an outlier, weird year. So that's going to make it more difficult to predict what's going to happen in 2021 for many people. So the withholding estimator benefits. The IRS Tax Withholding Estimator can help taxpayers determine if they should complete a new W-4, know what information to put on the W-4, save time because the tool completes the form worksheet. Taxpayers should prepare before using the Tax Withholding Estimator by having their most recent pay statement, information for other income sources, and their most recent income tax return. So have that information ready, have your tax return and your pay stub. That's the most recent pay stub, and then go into this estimator tool. It is a good tool to use. So the tool does not ask for sensitive information such as name, social security number, address, or bank account numbers. Note too, however, if you're using that tool now, you're kind of in the middle of the year now, so it's going to basically try to figure out what your withholdings should be from this point till the end of the year. And then next year, you might want to do it again in January, right? So then you can then you can adjust the withholdings to make it even for the entire year. If you do this change at the middle of the year, then it can kind of distort your withholdings over the entire year. So state or local withholding. Some individuals might also need to adjust their state or local withholdings. They can contact their state Department of Revenue to learn more. So the state, of course, has withholding rules as well. Sometimes they mirror what the Fed does, but some states, states are going to be different in terms of how they're going to tax. So you want to make sure that you're in compliance with whatever state regulations that you have for the withholdings there as well. So more information can be found at the links below. There's a video on how to use the IRS Withholding Estimator, Tax Withholding Estimator FAQs, frequently asked questions, Publication 505, Tax Withholding and Estimated Tax. There's links to those items here. There'll be a link to this in the description.